officer of Coinbase. And Coinbase is basically, the biggest transaction platform, the biggest bank, if you will, in the world of digital assets. And so it's a real honor to have with us Faryar Shirzad of Coinbase. So Faryar, please come join us. Good to see you, my friend. And let me tell you a few other things about Faryar. Faryar is a guy who I first met years ago working in the world of public policy in the United States Senate. He worked closely with former President George W. Bush on all sorts of major international economic policy questions. He worked with Goldman Sachs. It means he's done everything powerful and conventional until this moment. And now he's basically involved with a very new set of issues relating to assets, and these are digital ones. And so let me just start out, Faryar, and ask you for a moment real quick. Can you tell us and tell the layperson, particularly those people online, what's the big deal about digital assets and crypto? What is it?
It's a really
what are they?
Yeah, no, it's a very good question.
And when is it plural and when is it singular?
It's a really good question because a lot of discussions about digital assets or cryptos get confused in the sense that they focus on applications rather than kind of what the underlying value proposition is. So if you take a step back and think about the internet is a decentralized protocol that allows people on a peer-to-peer basis to transact data almost instantaneously and almost at zero cost, because the protocol allows you to transfer data between individuals, and we've all become quite accustomed to it, texting, emailing, setting up websites. And so it's a decentralized protocol that democratizes data and allows people to trade it. What the internet could not do, and until crypto came along, is to allow you to transfer value as seamless as you transfer data. And so if I had, before crypto came along, wanted to give you $1 and I sent you a photograph of $1, you could replicate it for infinite times. Or if I sent you anything else, like a stock certificate, it could be copied. And so the internet, the failure point of the internet was the inability to send things of value. Crypto solved that dilemma and created a system where you could have a unique digital token, the first one of which was Bitcoin. Now, Bitcoin has mass adoption, has a market cap of $2 trillion. But as countries...
But let me just interrupt you. So why did dollars, the dollar you wanted to take a picture of, but why did not digital dollars that exist in your Goldman Sachs accounts that you used to be responsible for, why did they fail? Why is that not enough?
Because there was no way to verify that a single dollar that I was sending from myself to you actually reflected a dollar that I owned, and there was no way for you to prove that you received it before crypto technology came along. And that's what and so you hear about validation and mining and all of these sort of complicated terms around crypto. These are all the processes by which you ensure that when I send you a Bitcoin or a tokenized dollar or a tokenized stock certificate, I actually own the thing, and that there's a immutable public record of you receiving it and owning it. And some of this is confusing because payments appear to be instantaneous to the consumer. We go to a shop, we tap a card, we use our phone, and we perceive money to move instantaneously. The processes that go around it to execute on those transactions sometimes takes days, a week to execute on. They're very cumbersome, slow, expensive. Crypto is going to speed all of that up, and the applications are building as we speak.
So I want to have you give the audience a sense of scale. Just to give you an example of what a miserable investor I am, I became convinced some years ago that Bitcoin was going to become a big deal. And the total market cap of crypto of Bitcoin at that moment was $13 billion. And it meant that each Bitcoin was about $300. And I was convinced that governments were going to get into this. And so I told the people I was with, governments are going to get into this, China's going to get into this, everybody's going to get into this, and there's no way that any government can operate at such a low feature. It's going to go through the roof. And so I bought a lot of Bitcoin and I sold it. I bought it at $300 and I sold it at $1,500. So I share that because the scale not only, it's a way to think about, the appreciation of a certain asset, but I also want to give people, it's more than Bitcoin. So give people a sense of how just, omnipresent digital currencies have become.
So as currencies, the market capitalization of all the crypto tokens that are out there is at around $3 trillion.
$3 trillion. So I was right, it was going to go up.
Yeah, you
Wrong about
you
scale.
Sold a bit early, and of that $3 trillion in market cap, about 220 billion reflect what are known as stable coins. So these are tokens that represent a dollar. So they're issued by people who give you a digital token in exchange for receiving a dollar, and the annual turnover of these digital dollars is on the order of about $3 trillion itself. So you have a multi-trillion dollars of payment activity that occurs on digital dollars on a market cap of all crypto tokens that is itself around $3 trillion.
So we're on the edge of the equivalent of a Mount Rushmore being born on Tuesday, if you will, or as I was talking about, mountains surging. Tell the audience why. What happens on Tuesday that's not going to only affect the U.S., but globally?
So most crypto stable coins, these are the dollar-denominated ones, are issued under a variety of regulatory frameworks, many of them offshore. The United States is on the verge of passing legislation to create a U.S. federal framework that recognizes dollar stable coins. And so the Senate will pass the bill on Tuesday of next week. We expect the House to act on it over the next couple of months and for it to become law in that time frame before the summer is completed. The legislation at the moment, the Senate legislation specifically enumerates that dollar stablecoins can be used for the most regulated payment activities in the United States. So for collateral management and derivatives trading activity, for interbank cash settlement, it can be used for capital account purposes, for bank accounting purposes. So you're going to see a dramatic surge in the use of tokenized dollars in the American economy. And then with that, a huge development of what are known as on-chain applications in the U.S. economy. And the question, I think, globally for the audience is, are other companies going to allow that innovation to occur only in the United States?
Companies and countries.
Companies and countries, or are they going to bring that innovation to their own countries?
Right, and so if they do that, I mean, I think one of the big questions out there that we've struggled with at GLOBSEC are questions like, the global challenge to the dollar. You've got a lot of nations, a lot of individuals who've been sanctioned, by Europe, by the U.S. There are some who think there need to be more of that behavior. Others who think it's been a power that's been abused because of the reserve currency status of the dollar. So if you're down the food chain as a smaller nation in Eastern Europe, or beyond the edges of Eastern Europe, or in the Balkans, or in Central America, there is an anger about dollar dictatorship, if you will. Does a dollar-based stablecoin behave differently than the federal dollar in this sanctions regime?
It moves on different financial rails. And so right now you have an effort by the Chinese, the Russians, and a number of other jurisdictions to create an alternative settlement system for foreign exchange transfers. And this is essentially, they're trying to build a workaround to the SWIFT system.
Right.
The U.S. was involved in an effort led by the Bank for International Settlement to create a U.S.-based alternative to SWIFT, with everyone anticipating that this new technology will become pervasive in payments. It raises new questions regarding how you...
Where will a dollar stablecoin live?
Well, it's a complicated debate. There are a number of governments, including the European central banks and others, who are issuing central bank digital currencies. So these are currencies that are issued by the government in tokenized form. The Americans have decided, as a matter of kind of political matter, that they will not issue the Federal Reserve will not issue a central bank digital currency, but that the private sector will be encouraged to issue tokenized dollars in what are known as stablecoin form. So there's a big discussion regarding whether government should issue these digital currencies or whether the private sector will. And I think the consensus will inevitably move to the American direction because of the dominant aspect of the American economy. And I think it raises hard questions. The UK, for example, is looking to create a stablecoin regime around the pound sterling. All of this is moving extremely quickly and is changing many of the paradigms that everyone is accustomed to with regard to policing illicit activity.
Yeah. And I want to go an inch deeper on that, but I want to tell you all that I do have Slido here, which I love playing with Slido if any of you want to pose questions, but we're intimate enough here that if you want to ask a question live, I'm also happy to repeat it for the sake of the camera, so we'll get to that in a minute. But let me just ask you again about the power of this and what the national security ramifications are of the rise of digital currencies, both negative and positive. I mean, I think when I first began looking at questions about blockchain and the rise of digital assets years ago, many people looked at it as a real, potential threat. Currencies for terrorists, currencies for bad guys, currencies for transnational narco gangs. And so tell us how that world, is that still a concern? Is that being managed? How does this enhance, I almost want to call it the liberty, but the security of players out there in the geopolitical space?
Yeah, it's a complicated issue. The largest mechanism that illicit actors use to engage in illicit activity is cash. So cash is by far number one.
They want the dollars. They don't want
they want the dollars, and they're hard to trace, and they can be moved. I mean, they're cumbersome, and if you get to a certain volume, it's hard to move them. Bad people use art, they use antiques, they use the traditional banking system, and they also use crypto. The challenge for bad guys to use crypto is all transactions that are done in digital asset form are traceable. They all occur on these public blockchains. So you don't know who's sending it, who's receiving it, but you can see the transaction, and that record of that transaction stays forever. And so there are things that law enforcement has developed. We do it in our own company, which is the ability to do what are known as blockchain analytics to try to figure out who the sender is, who the receiver is. So it's an evolving landscape, but law enforcement is actually investing a lot of resources into developing alternative mechanisms for public policy purposes around the new tech.
So you've been at this for a while.
Yeah.
I mean, you made the jump from being a excellent but conventional. I mean, I've known you for a long time. You've done everything conventional but awesome. Then you've moved into this digital asset area, and you've been in it for a while. And I'm blunt, and I often get things wrong. So tell me where I'm wrong. But my blunt assessment is that the Biden administration did not want to touch this. They didn't want to go this way. There was lots of dysfunction. You could find pockets of enthusiasm, but then the Securities and Exchange Commission were pulling them back, et cetera. Donald Trump and companies seem all in. Do I have that right?
Yeah, I think you have it generally right, but I want to answer the first part of your question. People ask what it's like to be in this space, particularly even starting a few years ago when I got into it, having been at Goldman Sachs for many years, for 15 years, and having lived the life of conventional finance. And I always tell people—
I'm sorry to call it conventional.
No,
it is.
I think that's fair, but when I came to Coinbase, I realized, and I embraced the fact that my job is largely to I imagine myself that we're back to 1997, and I'm the guy explaining to everybody what the internet is, and everyone's sort of saying, what is this thing? How does it work? And I'm trying to explain it to them. And so there's a real sort of special opportunity for those of us in the sector to explain what the tech does. But what was the second part of your question?
Well, then I'm asking, I was sort of asking, okay, so you're in this space, and now you've kind of moved in there about Biden versus Trump and this, political embrace. As we did an event, I'll just be honest, we did an event in Washington together, and it was tough. We did it during IMF World Bank Week, their annual spring meetings of the Bretton Woods institutions, and central bank governors typically are scared of this topic. It makes them break out into shakes, and we got about 4 or 5 significant central bank governors, including from this neighborhood, from Belgium, from Estonia. We had someone from Rwanda. We had others that came in, and they were brave. And since then, I've met a Federal Reserve Board member who wants to do an event on digital currencies. This used to be taboo for them. They were not able to talk about it. So I'm just interested in that's not, Biden, one way and Trump the other, but there seems to be a massive systemic shift in the appreciation that's just happening now.
Yeah, no, absolutely. In a way, the European Union deserves a lot of credit for developing the first comprehensive framework around crypto in terms of a large economy. So,
in fact, that's our next question.
The European Union, Singapore, the UAE, the UK now, Canada, most of the major financial centers around the world are in some stage of adopting clear rules around this space. And I think there's going to be a rapid adoption curve, particularly as the Americans clarify the rules around this.
So Slido works. It says, how do you face developing policy regulation developments in the EU and across EU member states? Do those policy makers understand crypto? What's your sense? And that's kind of why you're here, right?
Yeah, I think the people that developed the market and crypto assets regulation, which is the foundational regulation in the European Union, were brilliant. It was actually has some shortcomings and there are issues with it, but fundamentally as a piece of regulation, it's an extraordinarily thoughtful construct. Now, in the 2 years since it was adopted, they've been adopting the level 2 rules, and now the licensing around it is happening. So we're about to hit to a point where the European single market will now operate, and people will be able to operate across the 27 member states seamlessly under the rules of MiCA, and that will be an important point. I do think there's a sort of an ongoing public debate because the tech is unfamiliar. People don't fully understand how to use it, and it disrupts traditional systems. And that disruption, just like the internet disrupted traditional systems and traditional incumbents, digital asset technology is disrupting traditional systems and traditional incumbents, and that creates political problems. But it's a journey, and the pace at which we're moving is very quick, particularly with the Americans deciding under the Trump administration to go into hyperdrive on this.
Where are the most hostile places in the world to digital currencies?
There are very few places, very few jurisdictions that remain hostile to it. I think there's a lot of nervousness about the disruptive effect. Countries that have capital controls are most nervous about it. So places like India and others that have capital controls worry about crypto becoming essentially a dollarization agent on their economy. And so they're trying to reconcile that. The Chinese are actually, ironically or interestingly, by far the largest investors as a country in the technology. They have a national blockchain-based identification system. They have a central bank digital currency that's actively used in retail purposes. But the Chinese have a firewall around their internet. And so they control the internet, and then the crypto layer on top of the internet is similarly controlled. And so the Chinese are the most forward-leading jurisdiction on blockchain, but in a very controlled fashion.
I think this is about something that often comes up, and I feel like I know the answer, which is the price of these digital currencies is irrelevant to the transactional nature and the banking side. But how much will the price of Bitcoin transform in the next 10 years, and how many states will actually want to work with that?
Yeah, it's a hard question. I mean, I try to talk more about the technology than individual tokens, but the price of Bitcoin is hard to miss. I mean, we're now at $110,000, which was a bit, better than the price at which you you sold it.
Yeah.
But you have
again $1,500, which 5 times, So yeah, no, it's sad. I think. Thank you for wounding me.
Yeah.
Again,
but Bitcoin is, as I said, has about a $2 trillion market cap. You've got hundreds of millions of people around the world that use it. The Trump administration is now.
Do you use it?
I hold it.
Hold it.
Yeah, and
so you hold it as an investment. You're not looking at it as a transaction.
Yeah, and in a lot of places you see it's used as a hedge, and so particularly in places that have financial instability or economic instability, hyperinflation, you'll find people will either seek out the dollar or seek out Bitcoin. And you're even seeing in the United States, there's a sort of significant debt increase. There's worries about persistent deficits in the American economy, and I think that's part of the reason that the price of Bitcoin is accelerating. Bitcoin itself is not a good transactional instrument, but it's a very, very solid store of value, and that is what the thesis that has drawn so many people to it as a way to secure your wealth in a store of value that you can control yourself.
Well, it raised the interesting. I want to go deep in this because we got 2 minutes. But of Satoshi Nakamoto, how this all got set up, a kind of limited value. There's an equation there. There's a lot of power that's being used. Some people that are worried about the climate are worried, but there are other coins that are coming along. The Trump meme coin is one.
Yeah.
I mean, how much ends up being froth in this debate, and how much is real? And do you worry about people confusing froth for the reality of the benefits of the rise of digital assets?
Yeah. So as I said, crypto is just a technology. So Bitcoin, I think, will remain enormously popular as a store of value. Many of the other networks, tokens you've heard of, like Ethereum, Solana, are programmable. So you can build programmable applications. So a lot of the most interesting things that people are building to use the digital asset technology as an information technology solution or as a payment solution are largely built on these programmable tokens. But you can also have tokenized versions of the dollar, so a stable coin. You can have tokenized versions of securities. So the SEC, the Securities and Exchange Commission in the United States, is moving very quickly, and this should probably happen in the next 6 to 12 months,
right,
to allow companies to issue tokenized versions of stock and trade it on digital platforms, and it's really interesting.
And then finally, Faryar, I've been thinking about this. If we were to have a war game, GLOBSEC loves war games. It loves, scenarios. It loves foreign ministers and defense ministers. Occasionally, there's a token Treasury Secretary thrown into this. But if you were to imagine a war game where you've got a couple of ministers on stage that have these assets, that have a robust digital currency system versus those that don't, what tools, what levers do they have when it comes to national security and foreign policy that their rivals that don't have them are not able to do? Can you make that real for us?
So probably the most interesting war game you can observe is what happened to Ukraine. The Russians invaded Ukraine. The Ukrainian central bank shut down the banking system because they worried about capital flight and the economy getting gutted with currency leaving the country. The Ukrainians, though, at the same time needed to have access to resources to be able to pay for, governmental services,
right,
pay their population, pay for energy. And they, in very quick order, because they're such a technology-forward country, were able to stand up systems by which they were able to get foreign assistance. Hundreds of millions of dollars worth of crypto-based donations came into Ukraine in the weeks following the Russian invasion that then allowed the Ukrainian government to stay alive in a period of uncertainty. So what crypto is, it's a decentralized technology, and so it's less prone to attack and cyber intrusion. So it's a much more resilient, and it's an immutable record-keeping system. So for countries that are worried about cyber attacks or invasions or normal sort of run-of-the-course operational challenges, will move to the system, and that's happening as we speak.
Well, ladies and gentlemen, this is about as good a deep dive you can have in 25 minutes on digital assets and why they matter and why they're the new mountain range of the global topography. Faryar Shirzad of Coinbase, thank you so much. And let me just, as we're finishing up here, there's going to be a 25-minute lunch break right now. Lunch is going to be served in the Hilton Atrium Restaurant and Seasons Restaurant. And you can be back here at 2:15 for the next debate on confronting cyber intrusions. But also, we're going to have a special rapid response panel at 6:05 p.m. with my friend Amos Yadlin, who's the former head of military intelligence in Israel. And he's going to address the current escalation between Israel and Iran. Thank you all very much for coming. Thanks, Faryar.
Sure. Thank you, Steve.